What's up, Trader's Edge? It's Mark Sebastian, your only option. And today we're going to be looking at the VIX, the volatility index from the SIBO. So with that, let's dig in. All right, well, it was quite a week for the VIX. Started the week relatively low, on the 13th. VIX closed at 13, at about 1350. Topped out at 27 on the 18th. Closed above 24 on the 19th. And as I'm recording this, it's currently 1860, down 5.5 points. Big move. So what happened? Well, it starts with the Federal Reserve. Federal Reserve caught everybody flat-footed, but it's really the market's fault. So I want to talk to you about the S&P 500 and what we saw in the SPX, because the SPX, the VIX, is an index of all the option prices on the SPX. And so you can't really talk VIX without looking at SPX. So before this big move, I want to show you what SPX options looked like. So we're going to go on our Wayback Machine and we're going to look at options leading into the Fed for December 18th. So at the time, the S&P was around 60.50. The 60.50 straddle was about $38. $38 ahead of a Fed. That's about 0.5%. It's like nothing. Well, let's do the math. We moved $170. It's like 5 times what the market was expecting. It was a multi standard deviation move. It was a real problem. You want to know why the VIX blew up? It's because the S&P 0 DTE options completely flubbed pricing in the Federal Reserve. So it took us a couple of days to kind of get our druthers together. And now on Friday, PCE comes in, vol comes in, and now we're trading around 1865. So what do we do? Where do we go from here? Well, on next week is Christmas, and then the following week is Hanukkah as well, and then the following week is New Year's. We're only going to be open over that 10-day of trading. 2.5 of those are closed, so we're only going to be open about 7.5 days. Plus, we have the weekends. They're going to come in, if the market behaves, they're going to come in and smash volatility. So how do you play this? You could look at the VIX ETPs like VXX or UVXY or UVIX or SVIX. The simplest and easiest way might just be in VIX options, in trading desk and in weekly profit cycles. I know they're trading the VIX itself, and so we're looking at buying puts on the VIX. That, I think, is the simplest, easiest solution to trading what I believe is going to be a VIX pullback. I'm looking for the VIX to be 14, maybe 15 by next Friday, and potentially even lower by the following Friday. If things continue to calm down, I would expect January, leading into the inauguration, that VIX could be in the 12s. That is what I'm looking for. And out of that, what I love about this sell-off is that we saw the big move in the S&P, but individual equities did not see the same kind of giant increase in volatility. So I'm going to be trading next week 7 stocks that I think could have a real bull run into the end of the year, where the implied volatilities are low, post these traders coming in and absolutely crushing premium. If you haven't joined me yet in this special situation, click this link to join me, or give us a call, 888-872-3301. If you're watching me on YouTube, like, subscribe, and if you're interested in a stock or an index, or you have questions, leave a comment and I will get to it. All right, folks, I'm Mark Sebastian. I am your only option. I hope you have a wonderful weekend.